Good evening, everyone, and a very, very warm welcome to this last lecture meeting of our calendar year 2024, as well as the last lecture meeting for the 75th anniversary calendar year for BCS. Nilesh bhai, in 2024, BCS celebrated its 75th anniversary, and the tradition of having lecture meetings on Wednesday has been something that has been going on for as long as 75 years. And today as well, on 4th of December, a Wednesday, we are spending time on a topic which is very close to all of us. So first of all, welcome Nilesh bhai, and thank you so much for sparing time from your schedule for BCS and our community. Nilesh bhai, as chartered accountants and being India's largest and oldest voluntary body of chartered accountants, we are connected in various capacity with the capital markets, be it in capacity as sometimes auditors or in capacity as employees working in corporates which are listed or companies to be listed, research analysts, investors in personal capacities, fund managers. And somewhere we felt that there might be an apt discussion topic to talk about deciphering the current state of capital markets in India. While it is always difficult to decipher the state of capital markets at any point in time, what we are seeing right now are certain situations and certain trends, which if we are able to appreciate better, it might just help us taking better decisions. And which is where we felt that we should have the benefit of someone like you who can walk us through and help us navigate and understand better the current state of capital markets in India. So we all look forward to your session, Nilesh bhai. Personally, I'm also eager to listen to your Gujarati muhavras, which are always so impactful that it stays with us. But I once again welcome everyone to this lecture meeting. And may I request Kinjal Bhutta to formally introduce Nilesh bhai, though Nilesh bhai never needs any introduction, but just as a process, let's go through the drill, Kinjal.
Yes, Anand bhai. A very good evening to everyone and a warm welcome to Nilesh bhai. So I've been given this task as Anand bhai mentioned that he needs no introduction and he has been on BCS platform before. But just to extend this introduction for our participants, Mr. Nilesh Shah is a fellow chartered accountant, in fact, a gold medalist, and currently serving as a group president and managing director at Kotak Mahindra Asset Management Company. In his 3 decades of glittering career across fund houses, I think he's got a Midas touch because whichever team he has led, it has been awarded as the best fund house of the year across all categories of mutual funds like Kotak or ICICI Prudential or take it Franklin Templeton Mutual Fund. So this is nothing but sheer prowess and knowledge and his grasp over this field. Among his other achievements, he is part-time member of Economic Advisory Council to the Prime Minister. He is a part-time member of Unique Identification Authority of India, and he is a member to the Board of Association of Mutual Funds in India and a member of COBOSAC Committee of SEBI. To sum up, I think I can go on and on, but just to give more time to him, to sum up, he has, I think, played all the roles of a bowler, a batsman, as well as a coach. And we could not have a better speaker today for our lecture meeting on deciphering the current states of market. So Nilesh ji, we are thrilled to hear from you, and over to you, sir.
I hope the screen is visible.
Yes, sir.
Perfect. So very good evening to everyone. As a fellow chartered accountant, albeit not in practice, it's always pleasure to be in alma mater. And I have seen CA becoming an unpaid, unofficial advisor to their clientele on the wealth side. Clients don't only depend on us for their filing of tax return or signing of balance sheets or tax audit, but we become an integral part of their family, including in their wealth management. This presentation is a small attempt to ensure that you are abreast of what's happening in the world and you can take better decision for yourself as well as your clientele. If we look at global economy, US national debt is now exceeding 36 trillion. No matter how many times I update this slide, the actual debt keeps on increasing faster than I can update my slide. This is true reflection of American economy. Their debt is reaching size which is probably the highest in the human history. The more important thing is that American debt was just 35% in 1980. It went to 55% in 2000, and now as we speak is touching 123%. Does America need to borrow? It's a wealthy nation. Well, yes, they have to borrow because to create 58 cents of growth, they need $1 of debt. Essentially, એક સાંધે અને 13 તૂટે એવી અમેરિકાની હાલત છે. Now, how do you reduce debt? Well, the only way to reduce debt is reduce deficit. If you spend less, earn more, you will make surplus and debt will come down. Unfortunately for America, both President Biden and President Trump has seen highest ever fiscal deficit in peacetime. The only American president which had higher deficit than these two presidents was Franklin Roosevelt during Second World War. You will forgive them that in the wartime deficit has to be higher. With no signs of deficit coming down, what are the options for America? Well, their US Fed has to do a very, very delicate balancing. US Fed has done an exceptionally good job. They raised interest rates, but did not take out liquidity, and in the process created a soft landing for American economy. Inflation is down, growth is still positive, and they have created a miracle. Now, US Fed, which has done such a great job, is getting entangled under new administration. Their chairman, Jeremy Powell, had to make a statement that I won't resign even if President Trump asks me to do. Will Fed remain independent? Will Fed take decisions based on data, or will it be influenced by President Trump? That's a $1 million question. For America, consumption is very, very critical. It is 2/3 of their economy. And as they say, तोते की जान उसके गले में है, या राक्षस की जान उसके तोते में है. American consumers, American households, half the wealth is in stock market. अगर stock market नीचे, तो wealth effect disappears, consumption will get impacted, and the mighty American economy will face the pressure. If stock market remains higher, wealth effect will be there, people will spend, consumption will keep on driving the American economy. So one thing is very clear, President Trump will do everything possible to keep American equity market on the higher side. The second largest economy in the world is China. It's a miracle economy because it is boldly going where no man has gone before, as Star Trek mentioned. China will become first nation in the history of mankind whose trade surplus will be $1 trillion this year. There are only two countries, US and Germany, whose export is more than $1 trillion. बाकी कोई कंट्री का तो एक्सपोर्ट भी $1 trillion नहीं है जहां पे चाइना का ट्रेड सरप्लस है. So undoubtedly, China is a miracle economy. But miracles are on both sides. While their trade surplus is remarkable, their credit to GDP ratio at 200% is very, very high. Many countries like Japan, US, UK at that level of debt crashed. But China is going boldly where no man has gone before. Are there fault lines in China? Well, in India, to win election, you have to announce Ladli Behna. In China, also, you have to provide handouts to win, even though there is no election. Clearly, both US and China, the two top largest economies in the world, have their strength and also their weakness. It will be fair to say that world is leveraged with debt and they will need lower interest rates to survive this situation. In that context, Indian economy has done well. If we look at last decade, we have moved from being coach of global growth train, contributing low single digit to global GDP growth, to now becoming engine of the global growth. पहले दुनिया चलती थी, हम साथ में आते थे. अब हम चलेंगे तो दुनिया चलेगी. With China and US, India is influencing global growth. Now, one question is, if our economy has done so well, then why did government got only 240 seats? Our challenge is not growth. Our challenge is uneven growth. 13 districts of India around metros like Mumbai, Delhi, Kolkata, Bangalore, Pune, Hyderabad, Ahmedabad, Chennai, Surat, Thane, Jaipur, Nagpur, Nasik contributes half of India's GDP. Balance 692 district contributes the other half. Mathematically, 13 equal to 692 is not right. But in India's GDP, 13 is equal to 692. Always remember that what's happening in India is not unique. Globally, also 4% of landmass in US, Europe, Japan, and Korea delivers half of the world's GDP. Balance 97%, 96% landmass contributes other half. Always remember, whatever one says about India, opposite is also true. We can have world's most expensive wedding, and 2 kilometers from that destination or venue, the world's largest slum also coexist. In India, we have 3 distinct subsets. 1% of people living lifestyle of France, 27% living lifestyle of middle income country like Indonesia, and 72% Indians living lifestyle of sub-Saharan Africa. India has rich people, middle income people, as well as poor people. And poor people today are in majority. Now, in that background, if we look at today's economy, we are one of the fastest growing major economy despite second quarter slowdown at 5.4%, way below market's expectation. This second quarter subdued growth is function of rains, Shraddh period which came in September, and low government spending because of election cycle. October things have improved, and we believe second half growth rate will recover, albeit 7.2% GDP growth rate for FY25 is unlikely to materialize. There is also stress in microfinance. The 90 days dues are now likely to peak out at 10%, 4 times more than what it was in June 24 quarter. The GST collection is growing below nominal GDP growth, including in the month of November, where it came at 8.5%. Our biggest challenge remains employment, a lot many people are employed in agriculture compared to our peer group. Those jobs are neither remunerative nor gainful. If through some magic we can shift people from agriculture to industry or services, India's majority of problems will get solved. Fortunately, with Kharif bumper crop, good rains, rural economy has started recovering. There was a time post-COVID when urban did well and rural went down. Now rural is doing well and urban is lagging behind. We believe in second half, there will be Diwali spending, Christmas spending, festival spending. There will be wedding season. All of you would have received multiple wedding invites. My sincere request will be to please go and attend all those weddings. And instead of taking one plate, please take two plates. Thoda paisa kharcha karo taki economy does well. Most important thing is the government spending. In the first half, because of election, spending was 69,000 crore a month. In order to achieve budgeted number, spending will have to reach to 1,16,000 crore a month over next 6 months. Between festival season, wedding season, and government spending, we believe India should be able to witness better growth. The second advantage for India is the infrastructure which it has already built. For example, our GDP is 1/5 of China, but our highways are 38% of China's highways. Undoubtedly, we can leverage this already built highways to create better growth. Hopefully, India will leverage its infrastructure to create better growth. We missed industrial revolution thanks to British colonization. For 200 years, India's growth rate became zero. Partly Britishers were sucking us dry, partly because we missed industrial revolution. Now the world is witnessing digital revolution. We are not as advanced as China, US, but we are not far behind Germany, South Korea, France, kind of developed nation. Hopefully, Indian entrepreneurs will capture digital revolution and we would not witness impact like missing industrial revolution. One final thing is moving from majority government to coalition government. Under coalition politics, we will take some steps, more likely and less likely, and its impact on growth could be high, positive, or low, negative. Things like Uniform Civil Code, population control bill will be put into back burner. That won't impact growth much. Things like infrastructure investment, renewable energy, digitization, defense and R&D spending, employment, skilling, housing kind of projects for mass market, and fiscal prudence is likely to continue. All these things will keep India one of the fastest growing major economy in the world. Few things we will do in 2 steps forward, 1 step backward, Indian fashion. Asset monetization will happen, but not on a scale. FTAs will be negotiated, but to create a lot of time in negotiating. And ease of doing business is being improved, but in stages, not in leaps and bounds. Today, Indian entrepreneur is like Abhimanyu. अभिमन्यु तो अपनी चॉइस से चक्रव्यूह में गया था. Indian entrepreneur is born in Chakravyuh. Abhimanyu was fighting with Kauravs all together. But while fighting, he was having the confidence that my brothers, my uncle will come to help me. Indian entrepreneur not only fight Kauravs, which is market, which is infrastructure constraints, which is raw material, labor, but also Pandavs, which is compliance burden. There are 26,000 laws which kind of impact entrepreneurship. There are laws which says that if you don't whitewash your factory canteen, you can be put behind the bar for 3 years. Now, what is the definition of whitewash? That only inspector knows, you don't know. There are regulations which say that if you don't maintain your canteen cook's health record for 3 years, you can be put behind the bar for 3 years. घर पे अपनी बूढ़ी माँ का मैं हेल्थ रिकॉर्ड नहीं मेंटेन करूं, मुझे कुछ नहीं होगा, बट अपने फैक्ट्री की कैंटीन के कुक का 3 साल का हेल्थ रिकॉर्ड नहीं मेंटेन किया तो 3 साल जेल में जाऊंगा. All this kind of regulations are being removed, but the pace can be accelerated. If we do all these steps very well, then our growth rate will go to double digit. But we are doing it in a very slow fashion, and hence our growth rate is in mid-single digit. There are few things which we are unlikely to do because we couldn't do it when we had majority government. Land reform, labor reform, farm reforms, judicial reform जहां पे तारीख नहीं, justice deliver हो. Strategic divestment like Air India, selling Air India when it has accumulated 70,000 crore loss is not wise thing. Selling Air India when it was 100% monopoly in Indian sky would have been more beneficial. But tab Air India बेचते तो लोग चिल्ला चिल्ली करते. When you're selling loss-making things, you don't get any benefit. But such is our limitation. GST rationalization, all of you work in tax practices, you know it far better than me. And some of the things are actually reversal of earlier reform like pension. Now, we have to pray that all these things which we are doing will continue to support India's growth at 5, 6, 7, 8%. But if we want to generate growth rate to 8, 9, 10, 11, then we must do all the other reforms. Let's pray that to make Viksit Bharat, we will be able to implement these reforms over a period of time. If we can do those reforms, tomorrow's India will look like today's China. China today makes 90% of solar products, and it also makes 50% of footwear. It makes 60% of electric vehicles and 70% of air conditioners. To become a powerhouse like China, India must do reforms. Now, converting that economy into market, equity markets have done exceptionally well. The first question which comes in mind, yahan se market kahan jayega? Let's first find out where the markets will not go. If we look at our current market cap to GDP ratio, it is about 137%. The average historical market cap to GDP ratio is about 84%. Now, will we go back to historical average? If we go back to historical average, Nifty should be 17, 18,000. We think that's unlikely to happen. Our market cap to GDP ratio is unlikely to revert back to mean in a hurry. One day it will happen, but not in the near future. Why do we say so? Stocks are slave of earning power. Between 2010 to 2020, corporate profit of listed India grew from 3 lakh crore to 4 lakh crore. The growth was less than 3% every year. Correspondingly, equity market remained subdued. Overall market cap moved from 62 trillion to 113 trillion. Post-COVID, profit jumped 4 times. From 4 lakh crore in 2020, profit went to 15 lakh crore. No wonder market cap followed. As this profit growth has been so stupendous, we think market cap to GDP ratio is unlikely to come to averages, and 17, 18,000 Nifty as of today looks very, very low probability event. Markets undoubtedly are trading at a premium. Large caps are trading at small premium. Small and mid caps are trading at higher premium. The quarterly results for September, like the GDP number, were below expectation, but not by a big margin, and were essentially driven by disappointment in mid-cap stocks, where profit growth came at minus 23.6% against expectation of minus 8.7%. Is earnings growth for FY25 at risk? I don't think so. In the first quarter, Nifty 50 EPS was 287 rupee. Second quarter, September, it should end at 269. That's almost half of the overall earning per share for the year at 1059 rupees. In the second half, will we be able to generate 503 rupee earning per share? It looks quite likely. What is challenging is next year's earnings. That's unlikely to come at 1256. This may get revised downwards to 1200 rupee. It's a small downward revision, and that's probably discounted in the market, and which is why we saw correction in last 2 months. Third thing to keep in mind is the FPI selling. While DII have been big buyers, FPIs have been sellers. In October, they sold close to 11 billion. In November also, they have been on selling spree. December, they seem to be on the buying side. Are people dumping India? Answer is no. They are selling emerging market equity to get into US equity. We have seen outflows from almost all emerging market except Taiwan, and flows have gone into Japan undoubtedly, but more flows have gone into US market. We believe FPIs will be subah ka bhula, sham ko ghar laut aayega. If you look at their behavior, they have been seller on some days, they have been buyer on some days. In this year alone, they were sellers in Jan, April, May, October, November, but buyers in Feb, March, June, July, August, September. FBIs are using revolving door. आ रहे हैं या जा रहे हैं कहना मुश्किल है, बट सुबह का भुला शाम को घर लौट आएगा. Our markets are now driven by domestic investors. There was a time when we used to call broker, भाई आज FPI क्या कर रहे हैं. Today I am sure FPIs are calling brokers, भाई आज domestic investors क्या कर रहे हैं. In fact, what's happening in market is like a Lagan movie where local team defeated foreign team. The first Lagan movie happened like one day international in COVID period. In the month of March 20, FPI sold aggressively. Markets came down. Domestic mutual funds kept on buying. Eventually, foreigners stopped selling. Then they began like test match during October 21 to June 22. In Russia-Ukraine conflict time, they sold 250,000 crore. Domestic investors kept on buying. Eventually, foreigners got tired. And finally, we saw T20 match on election day. FPIs came and dumped on the result day some 20,000 crore. This time, instead of mutual funds, it was retail investors who stood in front and bought them out. Collectively, between direct stock buyers and mutual funds, again, we ensured that FPI selling didn't impact prices beyond a point. This domestic investor confidence gives us confidence that जब भी FPI आएंगे खरीदने के लिए, दुगना लगान देके, दुगने दाम देके खरीदेंगे. FPIs are selling today aggressively. But if we look at their amount of selling as a percentage of their ownership is not very, very high. During 2008 crisis, they sold 1.5% of their holding. As of today, what they have sold is insignificant compared to that. So overall, my feeling is that their selling is not very substantial, and at some point of time, they will turn to be buyer in India. There are many people who were worried that money is going to China, and this is some comparison. Chinese markets are up 30% from bottom, but they are at the same level as they were in June 2007. 17 साल से चाइना में किसी ने पैसा नहीं बनाया. We are down about 8% from top, but we are trading just 4 months behind price. Our P ratio is now at discount to historical average. Chinese P ratio is at a premium to 10-year historical average. The best part, Chinese earning per share grew 10% in renminbi terms in last decade. Indian earning per share on Nifty grew 166% in rupee terms. Nifty 50 EPS has outperformed CSI 300 EPS by 16 times without taking into account currency. That shows that FPIs will eventually come back if we are able to demonstrate this kind of robust earnings growth. Finally, there are certain spots in the market where one should be cautious. One is stocks where floating stock is limited. These are mainly PSUs. There is correction from the top, but we believe there is room for more correction as low floating stock enable these stocks to go to higher level. The second thing which investors must remember is to moderate return expectation. In BSE 500, 318 stocks have doubled since Jan 20. Now, that's a ridiculously high width or broad number, broad rally. It's unlikely to get repeated over next 5 years. While profit growth has been stupendous, in many cases, PE ratio has expanded. From 79 stocks trading above 50 PE, now 209 stocks trade above 50 PE. Undoubtedly, valuations are on the higher side. Look at this slide carefully. The 20-year return from 05 to 24 was 13%. The return between large cap, mid cap, small cap was almost parallel, almost in a narrow range. Since Jan 20 to October 24, 5 years, market return was 18.5%. Mid cap, small cap delivered almost double the return of large cap. But 15 years before that, market return was 11%, with small cap underperforming large and mid cap. Now, will we see this kind of return going forward? Answer is extremely low probability. Will we see return comparable to these numbers? Quite likely. And hence, investors will have to moderate their return expectation because base is higher. 4 lakh crore profit moved to 15 lakh crore. Well, you got 20%, 19% kind of return. Now, 15 lakh crore is not going to become 60 lakh crore. It may become 25, 30 lakh crore. And hence return expectations have to moderate. The other thing is to be ready for volatility. Market today is pricing in all the positive thing. US Fed, whether under Trump pressure or otherwise, will cut rate and drive money out of US into emerging market. The government with Haryana and Maharashtra election result will remain focused on reforms, and despite being coalition government, will complete full 5-year term. Oil prices will remain soft no matter what happens in Israel-Hamas war. Consumption, which has remained subdued in urban India, will recover. Geopolitical risk will get contained with President Trump's entry, and corporate earnings growth will remain in double digit. If all these things happen, undoubtedly markets will continue to move forward. One recommendation to investors: focus on quality over momentum. focus on high floating stock over concentrated holdings, and focus on reasonable valuation over expensive valuation. These are historical valuation of various sectors. While telecom looks expensive to its historical average, do remember that in telecom sector, price revision is likely to happen, and that will bring down ratio to historical average. We remain overweight telecom. Private banks are trading below historical average. We think it is time to own private bank. Automobiles are trading around historical average like consumer staple. We think it's time to be selective on bottom-up stock picking in automobiles and consumer staple. PSU banks are trading above historical average. IT is trading above historical average. Healthcare is trading above historical average. Real estate is trading above historical average. In all these four sectors, you will get opportunity on a bottom-up basis. Consumer durables and oil and gas looks again at premium to historical average. We think this is time to be underweight this sector. Cement and specialty chemical also trade at a premium to historical average, but their profit growth should be faster, and hence one can look to own specialty chemicals and cement. Sectors where one should be more careful: NBFC, capital goods, utilities, and infrastructure. The expectation of investor is very, very high, and it may not get fulfilled in these sectors. Finally, if I have to leave one advice about Indian equity, always think of Patek Philippe watch advertisement. It says you never actually own a Patek Philippe. You merely look after it for the next generation. Patek Philippe has done better than stock market, and I am sure Indian equity will do better than many other asset classes. Undoubtedly, there are dark clouds on horizon, but India growth story will remain intact and be rewarding for long-term investors. With this, I will end my talk, but happy to take questions.
Thank you, Nilesh bhai. We have Kinjal bhai with us. Kinjal bhai, would you like to take some questions?
Yeah. Nilesh bhai, one question is on the prospect of the luxury real estate market in India over next 3 years.
See, please remember that India is 1% France, 27% Indonesia, 72% Sub-Saharan Africa. If you are in luxury retail, luxury real estate market, your segment will be narrow. They will be quality conscious rather than price conscious. They need an address which can increase their social status. Now, if you build a super luxury apartment, let's say in Dharavi, that's unlikely to be an address where people will be willing to pay high premium. But if you build a super luxury apartment overlooking Hanging Garden in Valkeshwar, undoubtedly it's going to get huge premium. So if you are in luxury real estate, your segment will become narrow, but you will make a lot of money by selling boutique properties. Luxury real estate for the foreseeable future will remain boutique. It's a margin game, and mass market real estate will have to be factory model. It will be volume business. I hope that answers your question.
Nilesh bhai, the next question is, will investment in debt can be preferred over equity in sectors like infrastructure or capital goods for medium term?
See, my recommendation will be always follow your asset allocation. You just don't eat salad because at some point of time you will be worried about taste, and you don't eat only dessert because at some point of time you will be worried about disease. Your portfolio requires debt, equity, real estate, and gold. It requires Indian assets as well as foreign assets, offshore assets. Now, whether you should put X percentage in debt versus Y percentage in equity, that's function of your risk return profile. That's function of your investment goal. And that's also a function of market valuation. At this point of time, should debt be part of your portfolio? Undoubtedly, yes. Markets are fairly priced. They are no longer cheap. So having some allocation to debt is important. Now, whether you put that into taxable debt paper or tax-free debt paper, that choice is left to you because you should focus on post-tax return. One advice for debt investor will be return of principal is more important in debt than return on principal. Many people believe we will take risk on debt and try to earn extra. Take risk in equity, real estate, gold rather than fixed income. In fixed income, invest for return of principal rather than return on principal. In equity, gold, real estate, take risk, but follow the dharma of asset allocation.
Okay. So the next question is, in your view, what are the challenges you feel for the government before the next budget or for the next budget rather?
I think there is only one difficulty for government or one target for the government: make India Viksit Bharat. A Bharat where we don't have to provide 80 crore Indians free food. A Bharat where 72% Indians don't live like sub-Saharan Africa. That should be the target of every government. And how do we do it? Well, for full 1800 years in this era, India was world's largest economy. Sometimes China was number one, sometimes we were number one. And everyone was coming to India to make money. From Vasco da Gama to Christopher Columbus to people from Middle East, they all came to India to make money. Colonization took trillions of dollars from us. For 200 years, India became zero growth economy. Our contribution in global economy came down from more than 1/4 to some 0.5 or 0.6%. So clearly, the government has to target going back to the previous glory of India. We have to create environment where our entrepreneurs don't feel like an Abhimanyu, where they compete with the best in the world to create growth. And like olden days, where Yuan Sang, Fahian to Vasco da Gama to Christopher Columbus used to come to India, and the world was looking forward to India in terms of knowledge, learning, wisdom, we deliver the same, we achieve the same.
Right. Nilesh, one question is your opinion on investment in REITs IPO or rather REITs.
REITs is a very good investment. Many of us put properties on rental, and then it's so difficult to pay maintenance, do repair, pay electricity bill, pay society maintenance, and deal with the tenant. I think REIT delivers that solution in a competitive manner, in a consolidated manner. So instead of owning property and putting it on a rent, a REIT will be appropriate.
Nilesh, one question is something which is very interesting, that now we have a lot of advisors who are floating around on various platforms, and at times they tend to give you a better return on a smaller horizon. But then, how do you identify good investors and where do you stick to with a longer term horizon? I think that is very important in today's world, because we have now investment gurus floating around everywhere.
So one, frankly speaking, Kinjalbhai, if I was a market guru, will I waste my time with BCA or will I be enjoying my life on a Goa beach? I'm doing this because I'm not a market guru. I have to do a job at Kotak Mutual Fund. And I'm doing this seminar hoping that you will remember some good things about me and become my clientele at Kotak Mutual Fund. There is always an agenda. Now, I will tell you what I think is right, but please be aware that my agenda is to do business for Kotak Mutual Fund. Same way, you have to find out the agenda of all those market guru. Are they like your parent who are interested in your welfare and they want to make you rich? Or are they trying to take you for a ride? 99 out of 100 are likely to take you for a ride, other than your parent who is interested in your welfare.
Okay.
Even I am doing this seminar so that you become mutual fund industry investor over a period of time. So please separate agenda. There are many good financial influencers, but they will not recommend stock to you. They will recommend a strategy to you. In my entire presentation, I haven't talked about one Kotak mutual fund scheme. I haven't talked about one stock. All I'm talking about market, economy, and hoping to make you better investor. Same way, good financial influencers are likely to suggest you way rather than give you solution or give you buy this stock, buy this fund. Finding agenda of the other person is 90% of work done. Are they saying this for your benefit or their own benefit? सुनिए सबकी, करिए अपनी. Listen to good people, listen to smart people, but then build your own hypothesis and invest. And if you are busy in your practice work, then please allow a professional mutual fund distributor or financial advisor to do that work for you. People can go and file an online tax return, but they still come to us because we are professionals. We can give them right advice. Same thing financial advisor does.
True. Yeah. So the next question is your view on gold and silver over a longer time horizon. And also another question is in Tunis, do you feel index funds are a better choice?
So on gold, we remain bullish because central banks around the world have become like Indian housewife. सोना खरीदते रहो और बेचो मत. There is a competition between Chinese, Indian, and Middle Eastern housewives and central banks of the world to buy gold. Their buying will keep gold prices elevated. Now, gold has moved from about $1,250, $1,300 in COVID time to $2,600. There will be ups and downs, but eventually gold prices should go higher and should outperform fixed income, primarily driven by this central bank buying. Silver is bought for industrial usage. The supply is getting restricted. And we believe silver prices also will follow in similar direction like the gold prices. Both precious metal could be somewhere around about 10% plus or minus part of your portfolio.
Your views on index funds?
There is a popular myth that fund managers are underperforming benchmark index. When I was working in ICICI Prudential in the mid-2000, I read a report which said that fund managers are underperforming benchmark index. It's 20 years now, and I'm still having a job. Do you think anyone will be employing me if for 20 years I have not delivered value to customers? The amount of money I was managing in mid-2000 was some 30,000 crore. Today, ICICI Prudential will be at 8 lakh crore. Kotak is at 5 lakh crore. Do you think people would have given us money if for 20 years we had underperformed? So please ignore noise. Many research reports are agenda driven. And today, across our funds, bearing some exceptional period, we are outperforming benchmark indices, be it large cap fund, be it mid cap fund, be it small cap fund. There was a time when our funds underperformed benchmark indices, no doubt about it. But in a market जहां पे गधे और घोड़े दोनों दौड़ रहे हैं, we prefer to bet on horses and underperform the market. जब मार्केट में करेक्शन आया, गधे और घोड़े की औकात लोगों को समझ में आ गई. Today, no one is talking with data that fund managers are outperforming benchmark indices. So, should people invest in index funds? Undoubtedly, yes. You should invest in index fund. But should you also be investing in good fund managers which are outperforming benchmark indices? Undoubtedly, yes. Both will coexist in your portfolio.
Yes. Nilesh bhai, one question is on the US economy. I mean, on the Trump taking over as the president, and what could be the probable sectors in India that could face the music after he takes over?
See, one, I met today a global CEO and a CIO, and their view is that in any part of the world, politicians say a lot to win election. After that, what they do is totally different. Second, under President Trump, who has been highly unpredictable to say the least, you have to wait for announcements rather than what he's talking. His action will speak louder than his word, even though impact on market is of words rather than action. Third, undoubtedly, President Trump will focus on America First policy. He has won the election on America First, and we will have to deal with it. One recommendation to US should be that please just don't look at goods deficit with India. That's about $36 billion. Nothing significant compared to China. But please also, from our IT services exports, deduct 300,000 Indian students studying in America and spending $8 to $10 billion. About 17 lakh Indians traveling to America for holiday and spending whatever amount they are spending over there. Please also take into account all the payments we are making to Microsoft, Facebook, Twitter, Zoom, and other American companies. If we see that the total trade deficit between India and US is much lower, they need to keep that in mind while levying tariff. Second, India and America can create win-win combination. America has aging population. Their healthcare is very, very expensive compared to India. A large part of their doctors are made in India. They studied here and moved there. Almost half of the generic medicines which they buy is made in India. We have provided quality healthcare at affordable prices to America. That's the win-win combination. We make money, you benefit. What we did in generic medicine, what we did in IT services, that should be replicated in other parts of business. So I hope and pray we are able to showcase right picture to new administration and create multiple such industry like generic pharma and IT, where not only America first, but India also wins.
Nilesh, one question is on some books that you would like to recommend to people who invest in capital markets.
I mean, read whatever is available. Today with Kindle and Google, you have access to all the articles, magazines, newspapers available. In terms of knowledge, never ever restrict yourself to one book or one article. Be very, very greedy. सामने समंदर पड़ा है तो यही सोचना है कि मैं पूरा समंदर पी जाऊंगा. We know it is impossible, but सोचने में क्या बुराई है. ख्वाहिश रखेंगे समंदर पीने की तो उम्मीद है कि कुछ ना कुछ तो कर ही लेंगे.
Right. Thank you, Nilesh bhai. It was really a wonderful session. And before I propose a vote of thanks for the benefits of the participant, I will just announce few of the forthcoming programs. So we have various programs which are lined up as study circle meetings, or the Twitter space discussions, the studies, and there are series of programs on the standards on auditing and key learnings from NAFRA orders, which is one of the things which scares a lot of auditors. The transforming tax practice with AI, which is artificial intelligence, mastering the art of negotiation. We also have a CA-thon marathon, mentor mentee season 4, which is about to start from 1st of January. We encourage people to come forward as mentors, as well as encourage their young CAs to become mentees and get the guidance from the stalwarts of the profession. We have a program on succession and estate planning on 4th of January, a turf cricket match on 5th of January, the 22nd residential leadership camp on 24th and 25th of January, and the most awaited flagship program of BCS, which is the 58th RRC, which will be at Lucknow with a key attraction of visiting the Ram Mandir, in a recently inaugurated Ram Mandir temple. So may I request all the members to regularly follow the social media handles and the website to get updates, and they can also subscribe to BCS channel on WhatsApp for regular updates. Friends, with this, I come to the pleasant task of proposing a well-deserved vote of thanks to Nilesh bhai. So, friends, it is with immense pleasure and gratitude that we express our heartfelt thanks to Nilesh bhai for his very insightful, enlightening, and crisp lecture on the deciphering the current state of Indian market. And being a stalwart of the industry, he's not only shared the profound knowledge, but has also reflected his enthusiasm for the Indian economy. And after listening to his sessions anytime, I have gone back to the Indian markets with confidence, and let me share and accept that I have always created wealth after hearing to his session. So, friends, we all know, Nilesh bhai is a big fan of cricket, and he reads the pitch and plans his inning. So his analysis of the global and domestic economy, identifying the potential opportunities and risks, and strategic insights have today provided us with a valuable roadmap for navigating the dynamic world of investment. We are truly honored to have the privilege of listening to Nilesh bhai. His words have not only enriched our understanding of the market, but have also ignited a spark of curiosity and passion within us. I, on behalf of the Bombay Chartered Accountants Society, extend my sincere gratitude to Nilesh bhai for his invaluable contribution to today's session, and we look forward to many more such enriching sessions. Nilesh bhai, on this 75th year of occasion of BCS, the first flagship program of Reimagine started where you were one of the speaker, and we are again ending this year, you being one of the speaker. So it was truly our privilege to have you right throughout this year and honoring the 75th year celebration of BCS. So a sincere gratitude to you for sparing your valuable time. Thank you, Nilesh bhai.
Thank you.
Yes, Nilesh bhai. Thank you very much, Nilesh bhai. Looking forward.
Thank you, Nilesh, by an excellent session.
Thank you, Nilesh bhai. Thank you.
Thank you. Bye.
Thank you.